the second learning objective, our goal is that we must be able to make suggestions or recommendations or make decisions based on income statements. So now that we have some understanding of income statement, we will try to analyze it, and we will try to reach some conclusions, and on the basis of those conclusions, inshallah, we will try to make some recommendations. Okay, so this is basically a typical income statement. If you see, here is a typical income statement for a public limited company. So they are telling us that it's a PLC, public limited company, and that's why you will see corporation tax in the income statement. If it was a sole trader, you will never see corporation tax or dividends. It is in a simplified form to help understanding. Okay, so now we have to see the performance of 2012 and 2013. We will reach the conclusion that whether this business has performed better than the previous year, that is 2012, or worse than the previous year. So first of all, we will look at the profit. Let's look at the net profit. Okay, the net profit for 2012 is $240,000. And in 2013, this business earned $195,000 profit. So clearly there is a decline in the profit. And we can say that only by looking at the profits, we can say that this business has performed worse than the previous year. Okay, that's very clear. But let's see how and what is the reason behind this bad performance. First of all, we will look at the sales revenue. What is happening to sales revenue? It was $1,300,000 in 2012, and then it reduced by $50,000. There is a decrease of $50,000 in the sales revenue. Now let's try to figure out what can be a possible reason why the sales revenue has been declined. It has been declined maybe because this company has sold lesser units. There's a decline in sales. Now we will think why, because we are managers. We have to investigate, and then we can make a decision. Was it poor quality? Was the quality not good? This is one of the reasons why the sales they decrease. Or maybe the business has charged higher selling price. Sometimes you charge higher selling price, and due to charging higher selling price, your sales revenue goes down. Because if you increase the price, your customers can go to the competitors, and because of this, you might face the same situation where your sales revenue can decline. What else? Why the sales revenue might have declined? Maybe the competitors, maybe there is a new competitor and the customers are going to the competitors and we are losing our sales. So again, in this whole case study, they are not giving us the exact reason, but as managers, we have to investigate, we have to think, we have to find out the real reason behind the sales revenue, behind the decline in the sales revenue. Okay, what else? Is there increase in unemployment in the country? Sometimes people lose their jobs, there's unemployment, they don't have money, they cannot spend. Due to this, many businesses, they face decline in the revenues. If this is the reason, then we cannot do a lot about it, but still we can respond to it by lowering down our prices. But clearly, one thing is obvious, that sales revenue has declined and it is not good for the business. So these are the possible reasons. So let's say if there is unemployment, what decision are we going to make? What we possibly can do is we can reduce down our prices. Because if people are not able to afford and the decline in the revenues is just because of their affordability, we can try to decrease the selling price to stay in the business and try to survive. Similarly, if the units sold are lesser because of the poor quality, then we have to improve quality. We need to hire some quality inspectors, or we need to train our workers so that they can make quality products. That's again a decision by the management. Or if I am charging a higher price and my competitors are charging lower price, then I need to match the price of my competitors. Perhaps because of this, I'm losing sales and my sales revenue. So decisions, there can be a lot of decisions that we can suggest. There can be a lot of recommendations, but based on the true reason. So what you can say as a comment is that this case study doesn't give you complete information. It doesn't tell you what's the real reason. But what we can do is we can come up with the possible reasons of this decline, and we can suggest our recommendations. Either improvement in quality, or lower selling price, or perhaps doing better than competitors, adding additional features so that we can attract back our customers. Or here we can try to reduce down our costs and reduce the selling price. That was about sales revenue. Let's talk about cost of sales. What is happening to cost of sales? Now, this cost has remained the same. I cannot say that it's bad, but I will say it's not good either, because every business tries to reduce down the costs. Why cost of goods sold is constant? Why there are no improvements? Possibly because we were not able to get any kinds of discounts from the supplier, right? Or this is actually the one of the main reasons why we might not be able to reduce down cost of sales. Now, what can we do? What decision can we take as the manager? That we have to check if the business is paying late, if they are taking a lot, like the whole time the supplier is giving us. If somehow we can pay them early and get a discount, now this can reduce down my cost of sales figure, perhaps. Or another recommendation is I can look for a cheap supplier. I can look for other options on internet. So if I can somehow find a cheaper supplier, I can cut down on my cost of sales. So that's another recommendation. Now let's talk about, so till gross profit. My gross profit is declining. The main reason is the decline of my revenue. Let's see if there is any other reason that is affecting my net profit figure, which is a decline of nearly 45,000. Yes? Yeah. So if I see my expenses, or the expenses of this business, the expenses clearly declined from 160 to 155. Now that's a very good thing. That's a very good thing. It's good performance. They have cut down on their expenses. So we cannot say that they have performed worse in terms of cutting down of the costs. They have performed exceptionally well, but they could do more. They could try to find out other ways of reducing down the costs. If you see corporation tax, this is out of our control. It has declined due to the decline in profits. See, lesser profits, lesser tax. More profits, more tax. So I cannot do anything about corporation tax. Now here, if you see the dividends, we paid $130,000 to our shareholders as a share of profit. But this year, we paid only $120,000. Now, this can make my shareholders unhappy. This can make them unhappy. Maybe the competitors are paying more dividends. If they are paying more dividends, my shareholders will think, okay, let's take the investment and go to that, invest in that company. So I need to make them happy. But it really depends how the conditions are and the expectations of the shareholders. But still, it's not good. At least I need to maintain my dividends. So lastly, my retained profit was 70,000 in 2012. It's 40,000 now. I'm keeping lesser profit with me. So it doesn't matter a lot. It basically depends what are your needs. If you don't need to expand in the future, that's fine to keep a lower amount of profit. But overall, if I give you a comment now, overall, I will make a comment here that net profit is declining. The performance is worse. And the primary reason why this performance is worse is because of the decline in my sales revenue. I cannot see any other reason. Or possibly, if I talk about cost of sales, the business was not able to reduce down the costs. And now if the question asked me, usually an examination question, they ask you to recommend different ways to improve the profit. So I can recommend, number one, try to get discounts or find a cheaper supplier, or I can talk about these things. Either I can improve my quality, or I can reduce down the selling price to increase my revenue, or I can try to cut down on my expenses further. If I'm able to do it, then possibly I can improve my profit for the next year. So this is how we analyze the income statement. We find out the problems. First we comment, then we give the reason why good performance or why bad performance. Then we can give suggestions. And for every suggestion, there's a positive side and there is a negative side. So for example, if I look for a cheaper supplier, maybe I am able to reduce my cost of sales, but on the other hand, maybe the cheaper supplier will not be able to give me the same quality as my old supplier, which can disappoint my customers. So every method has positive and negative sides.